Good morning from our global headquarters in New York. I'm Menace Crenny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set your agenda.
The search ramps up. President-elect Trump set to hold fresh rounds of meetings with contenders for Treasury. Open to talks, the Kremlin says Putin is ready to negotiate, according to TASS. And it's the main event. NVIDIA earnings hit the tape post-market. Can the parabolic performance endure? Good morning, Manus.
Danny, good morning. Yeah, that parabolic performance, we'll talk more about that in a moment. NVIDIA is going to be a bigger volatility impact, maybe even than the Fed. But we're on this roller coaster of geopolitics. It's interesting to see how Putin, ready for talks, has so little of a bid relative to the offer that you had yesterday on the prospect of lowering the bar for nuclear, let's say, engagement. NVIDIA is going to be the big deal, up nearly 5% at the close of business yesterday. We'll dig into that in just a moment. We give back an eighth of 1% this morning. Roll it over, have a look at the bond markets. The bond market takes second seat, really, to the equity market this morning. But we learned that the bond market can behave as a haven. That's really what it told us yesterday morning, 24 hours ago. It is oversold, according to Strategist. And the rally that we've seen, a nascent rally, has legs. Bridgewater getting ready for inflation. I'd listen to that.
Yeah, well, hey, look, the big thing continues to be NVIDIA. Jim Reed this morning of Deutsche Bank, I thought laid this out really well, just kind of the trajectory that they've been on. In January of 2023, they earned $4.4 billion in the year past. Today, they're expected to earn $61.5 billion over the past year. And then by the time we get to 2027, that number goes to $118 billion. It's that kind of return that makes people clamor for NVIDIA and have a hard time forecasting just how much higher it can go.
Well, we put on $2.2 trillion in value. And the question, I think the questions that we're going to be asking ourselves today is the concentration risk. 40% of their revenue comes from four of the basic big hyperscalers. To what extent have they bought into Blackwell? We know that it's heating up, but Blackwell, they're able to charge nearly $40,000, $50,000 for one Blackwell chip relative to your average GPU. That is what is shape-shifting in terms of the numbers. And will the margins hold? Will the mid-70s margins actually hold for NVIDIA?
I'm just curious how much it can bully the market. This has been a market that's been distracted by politics, that's been distracted by the Fed. We haven't been talking as much about the ability of NVIDIA to move the overall market. Maybe that time returns. Well,
let's take that very question to Laura Cooper, Global Investment Strategist at Nuveen. Good morning to you, Laura. Are you ready for a bit of bullying from NVIDIA? Is it time for a fight back? How big a sentiment shape shift can NVIDIA have today?
Well, I think it's going to be quite market moving. I mean, if we think it is typically the bellwether for global AI demand, and this is coming against a backdrop where we have seen stocks come under pressure in recent sessions. So perhaps this could be that fresh catalyst to regain some of that momentum. I think it's interesting, though, in the sense that the bar is quite high potentially. If we look at what came through in other mega cap earnings, the focus was really on AI. And we're seeing that AI demand is far kind of outstripping capacity, despite kind of the significant increase in expenditures that we have seen on AI. Investors have yet to see the payoffs materialize in the way that they would want. And so we are seeing rising operating costs, and stocks were punished on the back of some of those mega cap earnings earlier. So the question is, will we see that kind of price action today? I think it really remains to be seen. And as like you said, it could be that kind of key catalyst for markets going forward.
Even so, last quarter, for example, NVIDIA, between expectations and what it delivered, it exceeded expectations, but it was the narrowest in 6 months, and that meant NVIDIA sold off some 6%. But Laura, since then, NVIDIA is up 20%. If we're buying the narrative of American exceptionalism, do you have to buy NVIDIA, regardless of how thin that expectation spread is today?
Well, I think it raises the question that you raised earlier around this concentration risk. I mean, certainly we are seeing investors pile into U.S. equities. And the question is, how much longer can this persist? And I think there's really an absence of a catalyst looking across the rest of the world to kind of thwart some of that upside. If we think about what's happening in European equities, for example, they've borne the brunt of a lot of that kind of risk-off sentiment coming from the potential trade tariffs. And it's really been a compilation of idiosyncratic stories in Europe around, some of that tech-led gains, but as well looking at kind of grid technologies driving the energy sector. But more broadly, the cyclical backdrop remains quite challenged. So even if we see kind of like maybe kind of disappointing earnings today, it's not going to thwart that overall U.S. exceptionalism story, at least in the near term.
Yeah, we're going from 30 to 35 billion, and it could be that they might miss for the first time in 8 quarters. You talk about growth and you talk about exceptionalism, but that's inextricably linked to the fiscal policy that Trump will deliver in 2025. Is that what growth hinges on to define exceptionalism in 2025 here in the equity market?
I think markets are certainly pricing in that growth impulse on the back of the potential fiscal stimulus coming through. Perhaps what's been surprising is that markets are essentially not taking into account the potential negative growth impacts of tariffs or immigration restrictions coming through. And I think it's why at this juncture, there's so much uncertainty that investors have to navigate. But it's not just a story for growth in the US. We've seen earnings come through quite strongly if we look at Q3 earnings. I mean, profits were coming in 8% year on year, more than double what investors had expected going into the season. And as well, sales growth remains quite robust. We could see some of that come under pressure next year, but I think this is really still a story where kind of broad-based gains can be had in the equity markets. We did see small caps start to rally on the back of that growth impulse. We still think there's room to run because if we do see those tax cuts come through, that's going to be beneficial for the domestic buyer base. And if we see tariffs come through as well, at least in the near term, that could reorient activity more domestically. And so again, that's another upside. So we're still buying into the broadening out of the equity rally that we're seeing in the US.
Before we even get to figuring out what next year is, Laura, 2 countries that you know very well, the UK and Canada, both in the past 24 hours had inflation figures that surprised to the upside. Should we be preparing ourselves for developed markets to see more of that? Is inflation not truly dead, and maybe it's a bond market that needs to price in more of that?
And that's a key question. At what point will we see this sell-off in global rates kind of start to be bought? And I think the fact that we did see inflation in the UK surprised expectations. We're looking at that services print, which came in 5% year on year, but that's largely aligned with the Bank of England's forecast. I think the key risk is if they start to see some of those fiscal stimulus plans from the recent UK budget come through, perhaps they will have to take a more cautious stance because the fight to get inflation back to 2% is clearly not done at this juncture. And it's one of the reasons why we expect the Bank of England to pause their policy rate in December, because economic activity, while softening, the inflation calculus is still to be made. So similar in Canada, they've been kind of much more aggressive on the easing cycle. But even in the US, we expect them to pause on the back of still sticky services inflation as well. So I think it's a key story for 2025. Will we see a reacceleration of those inflation risks?
Laura, I'm sure we will have you back plenty in 2025 to discuss. Laura Cooper of Nuveen, thank you so much for joining us. Let's get you some other top stories now that are trending on the terminal this morning. SEM Micro pushed back its target to reach at least $20 billion in revenue to 2030. It's been struggling with weak orders in its automotive and industrial semiconductors. It also announced a plan to cost cut and save the company millions by the end of 2027.
UK inflation accelerated more than forecast in October to well above the Bank of England's 2% target. A pickup that saw investors further dimming the prospect of more interest rate cuts in the coming months. It's the first sign of a predicted pickup in inflation over the coming year.
Blackstone has emerged as the frontrunner to buy a mixed-use office complex in Tokyo that's being sold by Cebu that could be worth $2.6 billion. It would be among the biggest real estate transactions in Japan, and the parties are aiming to sign an agreement by the end of this year.
Coming up in the show, still undecided, we'll bring you the latest on the next potential Treasury Secretary.
And later, we're going to be catching up with RBC's Wu Silverman to break down how this options market is gearing up for NVIDIA earnings as it takes center stage. All that to come on your brief. It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. President-elect Donald Trump's prospective cabinet has added some more people to it. Howard Lutnick as Commerce Secretary, Mehmet Oz and Linda McMahon as roles in healthcare, education, respectively. For more, let's bring in Bloomberg's chief political correspondent, Anne-Marie Hordern. Anne-Marie, I want to ask about Lutnick specifically, because he had been someone who led the transition team, had been floated as a Treasury. So what does it mean to have him at Commerce?
So at Commerce, what's interesting is that actually in the announcement, it seems like he's getting an expanded portfolio. to be very precise, it said he will lead our tariff and trade agenda with additional direct responsibility for the Office of the United States Trade Representative. So not to get too wonky on you, but to actually mean for that to happen, for USTR to report into Commerce, that would take an act of Congress. So taking it literally would mean they would have to go to Congress to change almost the reporting lines and who actually has legal ability for certain tariffs. But looking at it potentially what this maybe signals, I would look back to 2016 when there was a lot of reporting around and from President Donald Trump talking about how Wilbur Ross was really going to be the individual that was going to sit across from the Chinese, that was going to be the one that was going to negotiate these trade agreements or break the United States out of some trade agreements. What ended up happening by the end of the Trump administration was all that power ended up becoming really in the hands of Robert Lighthizer. So the big question I have from this is Howard Lutnick seems to be the individual from this press release that Trump is putting the energy, time into that is going to be at the helm of trade. But then the second question is, who then would take USTR? Who then would become the ambassador? Because this makes it seem like the first port of call for any country that wants to negotiate trade is going to have to go through Howard Lutnick.
And this has got consequences, of course, as to where Lighthizer really does reappear in the framework. So if Lutnick is officially at Commerce and gets through that process, what does that do to Treasury Secretary? We've got the front of the FT, Danny and I were both looking at this, is that Mark Rowan flew back from Hong Kong to meet specifically with Trump. So we're now down to Mark Rowan, Kevin Walsh and Senator Hegarty. And if you look at the poly markets, you look at some of the betting markets out there, it's pretty much neck and neck at the moment. Rowan, I'm surprised by this move on the front of the FT.
Well, we have that reporting as well. So Nancy Cook, Saleha Mohsen, and myself overnight reporting that Mark Rowan and Kevin Walsh, the former Fed governor, will be in Palm Beach. And they're going to be sitting down, set to have these interviews scheduled with President-elect Donald Trump today. You mentioned Senator Hegarty. He was with Trump yesterday in Texas at the Starlink launch alongside Elon Musk. Potentially, he's still in the mix for some sort of cabinet position. He could be a dark horse when it comes to the Treasury position. And Scott Bessent is still in the running to be Treasury Secretary. So really there's four names. I would coalesce them down to three: Kevin Walsh, Mark Rowan, and Scott Bessent. And there is potential that depending on who the Treasury Secretary goes to, one of those individuals, maybe Scott Bessent, we've reported in the past, could take the NEC job. Looking back, many people have reported that the long game for Kevin Walsh has been Fed chair. Powell's term is up in 2026. There is a potential for 3D chess going on where Walsh would take Treasury, Bessent would go to NEC, and then in 2026, Walsh goes to the Fed and Bessent would go to Treasury. That is just some speculation, and we're reporting that some Trump campaign aides see potentially as that a likely pair-up. But Mark Rowan is an individual that also has a lot of backing within some individuals in the Trump world. And yeah, he flew back from Hong Kong and he's going to be sitting down with the president today.
You mentioned that Senator Hegarty was in Texas for this SpaceX launch event. And I remember you and I had spoke to Rob Casey of Signum saying one of the big risks is that Elon Musk kind of loses favor with the incoming White House. To be fair, I mean, he advocated for Lutnick for Treasury, and Lutnick didn't get that. I wonder what his sway still is and how close him and President Trump still seem.
Not only did he advocate for Howard Lutnick for Treasury, but he also, remember, was out there on X pushing for Senator Rick Scott to become the majority leader of the Senate. I think what we've seen is that even though Elon Musk has this very special relationship with President-elect, he's called himself the first buddy, they almost seemed attached at the hip. Leading up to the election, and then after the election, he's spending a ton of time at Palm Beach. And yesterday, of course, inviting the president to watch this SpaceX launch alongside him, alongside Don Jr. and other members of the Trump team. The fact of the matter is, we've seen really the line he has when it comes to politics. People have not always looked to Elon Musk when it comes to some of the political chess making that is going on in Mar-a-Lago. He was wrong on Lutnick for Treasury, and he was wrong on Senator Rick Scott.
And then we also have had reporting that there's, unsettlement in the Mar-a-Lago camp in terms of his influence, his outsized influence and his outsized voice on some of these appointments. Anne-Marie, great reporting, and good to see you this morning. That's Anne-Marie Hordown tracking the moves for the next set of secretaries for President-elect Trump. Now, speaking of which, the president-elect may have some more meetings coming up with Russia. It says Vladimir Putin is ready to negotiate on Ukraine with Trump. That's according to local media, and this comes as Ukraine also shows a willingness to come to the table. Bloomberg spoke to the Ukrainian ambassador to the EU on Putin's sudden openness. Take a listen.
You see that as soon as Ukraine is getting stronger, as soon as Ukraine could be capable, to strike back, you see what's happening in Russia. So you see this development, and also what happened with this Putin's decision about changing the nuclear doctrine. It shows that it works. So if you talk to him with a position from strength, so they're more ready for a conversation.
Oliver Crook joins us now. Oliver, it sounds like we could be at the beginning of some kind of substantive negotiation process. In the past 24 hours, there's been a number of events that have happened, and this is about trying to set the chessboard for who has some negotiating power. We've already heard from the Russians that they're open to carve up and withdrawal from small portions of Ukraine.
Yeah, so Manis, let's get into the details of this, because as you say, the last 24 hours have been really sort of significant for this crisis that has been going on for a very long time, but maybe some sort of major breakthroughs over the last 24 hours. Let us just start with this report that originally came out of Reuters this morning, basically signaling from a number of Russian officials and former officials that Putin may be ready to come to the negotiating table to talk to Donald Trump. Now, to get into more of the specifics of what we're talking about negotiations over a carve-up for the regions of Donetsk, Luhansk, Zaporizhia, and Kherson. That is in the east of Ukraine. These are parts that are largely occupied in large part by the Russians. Russia may also be open, according to this report, to withdrawing from smaller patches of other territory. Putin, of course, still insisting that Ukraine basically abandon its efforts to join NATO. We should say that these are potentially the opening discussions, opening positions for Russia. We are very far away from actual talks and negotiations. That having been said, we have not had sort of specifics on regions from the Russians. And as you know, Manis, any negotiation starts from a price from one and a price for the other. Now the Russians potentially have put their price forward. It is far too high a price for the Ukrainians to pay, according to what their sort of red lines are and what they're willing to do. It is probably too high a price for the Europeans to pay in terms of what they have said. The question is, Manis, the fundamental question here, is it too high a price for President-elect Donald Trump to pay? That will be the fundamental sort of make or break here heading into these possible negotiations.
Well, as Manis mentioned, we were speaking with Marko Papic yesterday, who said that what we're currently seeing is both sides trying to posture themselves in the strongest position possible for when these negotiations happen. Oliver, what has happened over the past 24 hours? Because it's one that the market at least begun to react to, even though it undid that. What sort of evolution did we see in the conflict?
Yeah, Danny, as we've been saying, it's been a crazy sort of 24 hours for this conflict, really beginning with President Joe Biden saying that, yes, the Ukrainians can use these long-range missiles to strike within Russia. In short order, the Ukrainians did that, but they struck not just in the Kursk region, they struck deeper into Russia. That came also at basically the same time that the Russians and Vladimir Putin basically signed a new nuclear doctrine. Here I'll quote directly that the Russians have a view on attack of its territory from a non-nuclear state, i.e. Ukraine, if it is joined or supported by a nuclear power, the United States, they will consider that as a joint attack. That is the sort of position of the new nuclear doctrine, meaning that if they sort of meet those criteria and that those are sort of coalition strikes, that it would be appropriate potentially for the Russians to retaliate with nuclear force. Now, obviously, this caught the market somewhat off guard yesterday. This ripped through the sort of Haven complex yesterday. The question is, as you point out, it is sort of logical potentially that everyone tried to exert maximum pressure ahead of what could be negotiations.
Oliver, thank you so much. That is Bloomberg's Oliver Crook. A quick check on bonds this morning, because specifically in the UK, we saw an inflation print that came in higher than expected. Manis, also moments ago, we got Eurozone wages. Growth was the most since the euro was introduced. Wages jumped 5.4% from a year ago. So yields up across the world. Again, leading, though, in the UK, up some 5 basis points.
front pages look a little bit like this. Headlines from around the world. We'll kick it off with the New York Times. President-elect Trump joined Elon Musk for the latest Starship launch. It carried out the 6th test flight and showed a mix of progress and setbacks. SpaceX was unable to recover the enormous booster stage of the rocket, but the splashdown of the upper stage was successful.
No metal chopstick moment. Next on the Wall Street Journal, Comcast is planning to spin off cable TV channels, including MSNBC, CNBC, and USA. All that according to people familiar. The business will be well capitalized and positioned to make acquisitions of related assets. NBC, Bravo, Peacock, all that remain with the parent company.
And it's got a drum roll. It should have its own theme tune, actually. NVIDIA will deliver their latest quarterly results. 30 to 35 billion is what we're estimating out there. Wall Street analysts say the revenue span, it is wide. New products, Blackwell, how is it done? How has it been adopted? I think that's probably one of the questions, isn't it?
The song is obviously A Whole New World, right? It's got to be Disney. I was hoping you would.
No, not a chance.
It's got to be
in a former career. Not today, not on Bloomberg.
That's only for the commercial breaks. Okay, coming up, we're going to catch up with RBC's Amy Wu Silverman, who says that investors are showing extreme bullishness ahead of NVIDIA earnings. We're going to catch up with her next on Bloomberg Brief. From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger alongside Manus Cranny. Let's set your agenda.
The search ramps up. President-elect Trump set to hold a fresh round of meetings with contenders for Treasury. Open to talks, the Kremlin, and Putin says it's ready to negotiate. That's according to TASS. And the main event, NVIDIA earnings hit the tape post-market. And the parabolic performance endure. It's a drum roll on its own, Danny.
It is all about NVIDIA, not just today, but the week. We did see NVIDIA save the market yesterday. It's little change this morning after geopolitics first set it off. We're little change this morning, slightly more weak in the Russell 2000 futures. Bond markets, though, are under a bit of pressure. That might be because of global implications of both UK and European wage growth coming in hotter than expected. Your 10-year yield up nearly 2 basis points. But bonds step aside. It's NVIDIA that takes main stage today, Manus.
It is indeed. I mean, it's put on $2.2 trillion in equity value this year. And if you look at the couple of things that we are going to be focused on, one, what is Blackwell, the new chip, doing? You just think about the kind of pricing for that. It's $40,000 to $50,000 relative to an average GPU, which is $30,000. Then you begin to understand why this company is so sought after, to be able to continue to deliver the revenue growths that we've seen from this company.
It is unprecedented. And again, I go back to the numbers from Jim Reed of Deutsche Bank that in 2023, $4.4 billion is what NVIDIA earned over the preceding 12 months. Today, that's expected to be $61 billion. By 2027, that's expected to be $118 billion. These are huge numbers with huge expectations. Helping us to break it down is Amy Wu Silverman, head of derivative strategy at RBC. Amy, just what is this option market setup looking like for NVIDIA's earnings today?
Like in one sentence, it's pretty bullish, and that has not always been true, even though the stock obviously has been doing quite well. It's much more similar, Danny, to the beginning of this year, where we saw so much demand for call options that it was actually inverted, meaning the call implied volatility was greater than the put implied volatility. That's generally something odd that we see in derivatives, although less so now for NVIDIA, but we're still seeing that bullish sentiment this time around.
Look, Amy, part of this bullish sentiment is transmitted in the year-ahead estimate, 6,500 from Morgan Stanley, Goldman Sachs. There's a sense of exuberance in these equity markets. Danny and I caught up with Goldman Sachs last week, and they're writing far out of the money calls, and they're funding those. Sorry, they're writing far out of the money calls, and they're buying sort of near term. How bullish is the setup going into Q1 for equity markets overall?
Yeah, it's a really interesting question. And the way I would characterize it is the outlook is very sanguine. However, there are tails to watch out for. And I think this is a setup that we're just going to have to start to get used to, in particular with President Trump in the office again, which is, in general, he is someone who looks at the stock market as a gauge for himself of how successful the administration is. And overall, the economic outlook is positive too. But that said, there's just more volatility that we would expect and that portfolio managers expect in his administration. And you see that in the bid up of out the money tails in in particular on the downside. And I think that's how portfolio managers should navigate going forward, which is to own those tails, but in general to be set up positively.
Amy, it used to be, though, that as NVIDIA goes, the markets go. Should I scratch out NVIDIA now and just put bond yields, that as bond yields go, the equity market goes?
I mean, a little bit probably, but look, I always say it comes down to the meat of the market. And look, the meat of the equity market still comes down to the Mag 7. I definitely think the broadening trade is healthy, and we have seen that. But what I've sort of warned investors is you can't have the broadening trade if the Mag 7 goes, period, because it's just simply a matter of concentration and weighting. Those have to be healthy. Those have to be okay. They don't have to be, slam it out of the ballpark, but they cannot go. But at the same time, if we do have more of these IWMs doing well, these cyclicals and these old economies, that's obviously healthier for the undertone of the market than it was before.
So the other side of this trade, Amy, is that today some people would rub their hands with glee, Nancy Tengler being one of them. She said, if there's any dip in this market, in this NVIDIA market, you want to jump in. If there is an unseating in NVIDIA today, it would be a spectacular opportunity really to get involved in those out-of-the-money calls, because this stock has a way of rehabilitating itself.
Yeah, I think that's right. And I think that's why you see the derivatives market positioned as it is, which is, one conversation we've had a lot is going into the election, it kind of felt like your hedge fund community was relatively well positioned for elections, but it didn't feel like that with the long-only asset manager community. And I can tell you just from ad hoc conversations that not everyone is fully in the market yet. And when you see this situation of this kind of FOMO and MOMO, this necessity of having to catch up, right, especially as we get into year end, I do think it's more of a buy the dip mentality than it is the other way around. And then you just have the seasonals going in your favor for November and December. Now, will that look different next year? Sure. But as we head into the end of the year, that's why I think the outlook remains sanguine.
One of the things we saw after the election was basically for every single asset class, for volatility just to collapse. Amy, how much do you understand of the risk rally we've seen since then? And I realize we've given back a fair chunk of it, but how much of that is just about the fact of volatility dissipating with certainty, maybe on not what policy would look like, but the man behind the policy for next year?
I always think there's irony to this, because when I actually speak with investors and they kind of think back to the 2016, 2020 era, and they think, oh man, that intraday volatility, that Twitter volatility was awfully high, right? Look, what I would say is you're going to get a lot of dispersion in this market. And what I mean by that is when you have a pick like RFK, for instance, that obviously has a lot of impact to healthcare volatility, but it could be opposite for financial volatility. And so when some sectors are zigging and others are zagging, your index level volatility appears quite low, it appears quite damp, but it's actually a function of those sectors moving in different directions. And I think that dispersion, our technical name for it in the derivatives market, is going to be something that we're really going to watch out for. And it harkens back to the market that, we used to call that paddling duck market. It looks calm on the surface, but there's a lot of rotation going on underneath.
It's a little bit like sometimes we're getting ready to do the 5 a.m. here every morning. Look, you talk about potential volatility, and obviously the Treasury pick is going to be incredibly important. It sounds like we're coming down to Besant, Warsh trade-off, maybe Mark Rowan. How important, Amy, is it? Because as the Warsh name became warmer, so the bond market became a little bit calmer. How important is that pick to financial volatility?
Yeah, it's a great question. I'll just say, of all the sectors we've been talking about, financials has looked the most okay. It's something our chief equity strategist has echoed as well, in the sense that, no matter who you put in that spot, the idea of greater M&A, the idea of more deregulation, and perhaps changes in the other regulatory units would be net positive. But I do think anything that has a higher correlation to bond markets and maybe expertise in that area will obviously be good for equity markets. But again, one thing we've spoken to investors about is that Trump views the stock market as a gauge to his success. And if that is the case, that in general should be good for equity markets. So it could be the stock market, not the bond market, that checks the profligacy of the next Trump administration. Amy, thank you very much. Amy Wu Silverman there of RBC Capital Markets from New York. Good morning.
Welcome back to your brief. I'm Danny Berger alongside Manus Cranny in New York. President-elect Donald Trump has tapped Cantor Fitzgerald CEO and one of his most prominent supporters, Howard Lutnick, to lead the Department of Commerce. Linda McMahon has been picked for the Department of Education and Mehmet Oz to lead Medicare and Medicaid. For more, let's bring in Bloomberg's Megan Crane. Megan, great to see you in the studio in New York. So we're getting these appointments now pretty fast and furious, save for Treasury. We'll touch on that for a second. But what's the decision-making behind the scenes to get some of these names brought up?
Right. So these choices are really reflecting Trump's tendency to hire people who are loyal to him, who are willing to embrace his ideas about change. And, he's also really big on people who can sell the change, right? Sell the issue. The TV doctor might have been a surprise to run a huge bureaucracy, but he is a television personality who has really been around, and maybe you can see how Trump would be drawn to someone who is loyal to him, but also who can sort of sell his ideas about change in those organizations.
Well, we're already beginning to understand how Lutnick will go to Commerce, but go to Commerce with perhaps a more expanded leadership portfolio. He will have an outsized role in foreign trade. And again, the question is, how is he empowered to do that? And if he goes to Commerce, this again narrows the field again for Treasury, doesn't it?
Right. So he was a leading candidate for the Treasury Department, but obviously has been taken off the table to go to Commerce. I think it was particularly interesting that Trump has not yet made a choice, which to me signals that he doesn't really like the candidates who've been in front of him for that role yet. Okay. So he's met with more people. He flew to Texas with Senator Hagerty yesterday, who's apparently in the mix for that. Trump seems to be decisive on these choices this time, so I'm a little surprised it's been taking so long. Maybe he's trying to find just the right fit, because Treasury is obviously a very powerful role. They have more meetings coming up or today with other candidates, so we'll sort of see what happens.
Megan, something you said really struck me, the idea that maybe it's not the drama being that he picked a TV doctor or a Fox News host or whatever, but he's picking these people to run bureaucracy, something like Medicare and Medicaid. I mean, how steep of a hill is that for someone who doesn't have experience managing, some of the United States' biggest employers? Right.
So I think that's a huge, very steep hill, right? The Centers for Medicare and Medicaid insure like a third of Americans through, Medicare and Medicaid and the Affordable Care Act. So, I think that's a steep hill, but also these huge bureaucracies have, professional leadership and civil servants who do those jobs. So there is an argument to be made that you can have a figurehead at the top who sort of sells the agenda.
So we saw a lot of Elon Musk. I think the phrase is, the first buddy? And we know that he's been behind a lot of the names that go into the frame in the first instance. Looking at the story that Vance, the vice president, he's getting ready to take Gates, along with Hegseth, to meet senators. Now, this is to try and curry favor, to curry votes, and really to just sell these two people into the Senate. What's your read on that?
Well, interestingly, that's like the traditional way of doing it, right? They go and meet with senators and sort of sell themselves. There's sort of 100 different job interviews, I suppose you could think of it that way.
Sure.
It makes me think that they're leaning against recess appointments and sort of trying to get enough votes in the Senate for these rather controversial picks, especially Gates and Hegseth also, who doesn't necessarily have a lot of experience. Certainly not running a huge bureaucracy like the Department of Defense.
Again, that goes back to Danny's point in terms of the qualification for the size of the portfolios that they may well have. Megan, thank you so much. Getting up early and keeping it real here on Bloomberg Brief. Megan Crane on the political front. Wall Street is watching one stock only today. That is NVIDIA. The earnings are set to come after the market closes. The stock is up 200% this year. Let's bring in our Bloomberg intelligence analyst, Tamlin Bassin. Tamlin, good to have you with us. Look, there's commentary from everywhere. This stock is up 2.2 trillion. This is about building the narrative around the revenue going forward. How close is it on the revenue numbers? Just set out the stall on what we can expect after the close today.
Yeah, so I think on the revenue numbers, the market's certainly going to be looking at whether or not NVIDIA hit both the 3Q guidance, but also analyst expectations for 3Q. But I think even more so, the market's going to be focused on what guidance for 4Q is. Now, we aren't anticipating a bit of a slowdown, but the question is, what is the nature of that slowdown going to be? And also, where is demand coming from? Are we still seeing just rampant demand for data centers? Is that being driven by cloud service providers? Or are we seeing other enterprises sort of getting into the mix and starting to leverage NVIDIA's GPU products?
I'm already imagining the post-earnings call, Jensen Huang in a leather jacket somewhere, and doing his, as Dan Ives says, drop the mic moment. What are going to be the calls and pressure that Jensen specifically is going to be facing in this earnings report?
So he's going to be facing pressure, one, on sort of this demand wrap, but also specifically on the Blackwell platform. Now, this is a platform that is touted as sort of the next generation of NVIDIA's chip, and they have expected revenue from Blackwell to be in the billions of dollars in 4Q. However, there have been media reports of a potential overheating issue, and I think there's going to be a lot of questions on Blackwell. Is this something that the market is really taking up as much as management has expected? So I think that's going to be absolutely a key area to focus in on.
Tamlin, obviously, the first time round under Trump 1, NVIDIA had a lot more exposure to China than it has now. But over 57% of its overall production is actually on an international basis. So there is a risk with the international business, but perhaps less dependent on China?
Yeah, I think that's a great way to put it. They've sort of refined the products that they bring to market in China, and that's also, with their growth elsewhere, that's lead to China being a lesser percentage of overall growth. But certainly with Donald Trump coming back into office, there's a chance that these sort of export controls are going to tighten. And NVIDIA, and I think the entire technology sector, is going to have to navigate these frictions going forward. So I would also expect a lot of questions on how NVIDIA is positioning itself to do just that.
Tamlin, the thing I always come back to, and Manus mentioned this morning, the concentration risk. Microsoft is 20%, just under that, of revenue for NVIDIA. Meta, 10%. Super Microcomputer, 7%. How have we heard from some of these hyperscalers and their continued demand and their desire to keep ramping up spending and supplying NVIDIA with the revenue that Wall Street craves?
Right. Well, in the near term, we have not seen really much of any indication that there's going to be a pullback in the capital expenses from these primary clients. But I think the question is, where is that next wave of growth going to come from? Is it going to come from other enterprise clients? Is it going to come from sovereign clients, which is something NVIDIA has talked up in recent years, where they're seeing more governments interested in building their own AI systems? So I think a lot of people are going to be focused on where is that next wave of growth going to come from, in the event that these key clients do eventually sort of narrow their AI spending.
The one thing that the market is going to be focused on is the margins, and obviously the suppliers into NVIDIA are incrementally raising their costs. Can they still survive in the mid-70s on the margin side, Tamlin?
Yeah, I think in the next few quarters it might be tested a little bit, just because of the Blackwell rollout and sort of some of the components that go into that. But I think we're seeing long-term, we think it's probably healthy range for them to get back to, I think, after they work through sort of these supply issues that they're facing in the near term.
Tamlin, thank you so much. That is Tamlin Basin of Bloomberg Intelligence. Now, we have more earnings on deck today before the market. Target, TJX, they're both scheduled to report. That's after Walmart boosted its outlook for the year on a solid start to the holiday season. Bloomberg's Eric Fanner joins us now for more. Eric, the thing I was struck by in Walmart's earnings was 3/4 of their gains were led by households who earn more than $100,000. Basically better off consumers trading down. Are we likely to see the same sort of thing in Target? Is what's good for Walmart good for the rest of the retail sector?
Yeah, I think that's a great question. I mean, it's the big thing that Target is up against here is that, I mean, Walmart just seems to have hit kind of a sweet spot there with, with that segment of the market that is, is able to spend, is willing to spend, but they're still looking for value. I mean, that's what they highlighted over and over. Going into the holiday season, that's the segment that's going to drive their sales. And for Target, it's been a bit more of a challenge. They had a great quarter last time around. Surprised a lot of people and bounced back, but that was after a really tough period where there was just a sense that their value proposition wasn't quite the same as Walmart's, right? And their pricing was a bit higher. So even with the more affluent consumers, it wasn't quite resonating as well as kind of that broader mix that Walmart has. So I think that's the big question. We'll see. They had some good momentum last time around. Can they continue it into the holiday period? That's what everybody's going to be looking for.
Well, the other name that we get numbers from is TJX. And if you listen to the language in Walmart, discerning customers, they've obviously got a suction on everybody across the income spectrum. But what's the read-through, do you think, for TJX?
Yeah, so I mean, with TJX, it's the value proposition is the same question there, really. You know, they're at the low end of the apparel market, so they're looking for people who are looking for a bargain. They have also, they've been doing okay of late, not spectacularly at Walmart. I mean, people have been a bit more discretionary about spending on clothing, along with things like housing, home improvements, things like that. We've seen some of the home improvement retailers struggle too. It's that discretionary spend that's been a bit more up in the air, perhaps, than the kind of more universal offering that somebody like a Walmart offers. So, there's some other factors with TJX that could be playing into this, like the weather. People have cited, the hurricanes, the warmer weather that was affecting the U.S. in October. Whether that could play into their results. People aren't necessarily going to spend if they aren't seeing that seasonal change. So that could be there's a few more wild cards there with TJX, probably.
I love a bargain. Eric, thank you very much. Eric Faneder, tracking the stocks ahead of the open. Coming up on the show, we'll get you set up for the trading day. A little bit of Fed speak. But there is only one event that really matters. It is NVIDIA. We'll walk you through from New York in just a moment.
It's your Bloomberg Brief. Danny Berger, Manus Cranny in New York. Let's get you set up for your trading day on this Wednesday. We're going to get retailer earnings, both from Target and TJX, before the bell after Walmart yesterday. Then $16 billion of 20-year Treasury notes will go on auction at 1 p.m. Plus plenty of Fed speak. We're going to hear from Barr, Cook, Bowman, and Collins, all of that throughout the day. And then, Manus, it is the main event. There's nothing else to care about. Okay, maybe some other things, but NVIDIA earnings will come out after the market close. What do you got for movers this morning?
Well, actually, NVIDIA was up nearly 5% in the after hours last night. It's bounced back into the green, up a quarter of 1%. Comcast, they're spinning off some of their assets, the cable TV assets, MSNBC, CNBC, and USA. That's according to Bloomberg sources. So let's see what that looks like at the end of that process. You've got Wix.com up 12%. After the earnings, software firm boosting the revenue forecast. And as you say, Danny, it is all about NVIDIA. What is the read-through from Blackwell? We know they've got a concentration issue. 40% of their revenue comes from those four hyperscalers. That is what you call hyperscaler risk with cyclicality. I'm just interested if it can move the overall market. It did yesterday. It was a call back to simpler times, if you will, but you had NVIDIA up some 5% in a market that was down on fears of geopolitics of Russia, Ukraine, and NVIDIA lifted the whole market up. Are we getting back to that kind of atmosphere where as NVIDIA goes, the market goes? Well, it certainly has got the capacity to set the tone for the back end of the year. And just to quote the Deutsche Bank figures, 2024 it made $61.4 billion. By 2027, $118 billion. Do you want to be left behind in that sweep? It's unprecedented growth that, honestly, people have had a hard time modeling. Okay, those results after the bell. First, it's surveillance up ahead.